Welcome, my friends. What is up with Apple, you may ask? Well, something rare just happened. Apple sales fell 5% in Q4, which makes it the largest quarterly revenue decline since 2016. Apple's overall sales for the holiday quarter were about 5% lower than last year's. That was the first year-over-year sales decline since 2019. Barclays cuts Apple price target on concerns over demand weakness and slowing services growth. When is the last time that happened? But, when you think about it, what has Apple really invented lately? In fact, what has any big tech company really invented lately? And, Apple iPhone 14 sales are rumored to be slower than expected. And MacBook sales are confirmed to be down. Let's admit it, the iPhone 14 is really not a lot different than the 13. And a lot of iPhone users are still on iPhone 11 models. Barclays analysts said they are lowering their estimates for Apple. Wall Street analysts cite production problems and weakening demand. The analysts lowered their price target on the stock to $133 per share. That is down from $144 per share. Analysts are concerned that Apple services estimates are at risk. So, what does this mean for Apple? What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Apple missed expectations for basically every financial measure that there is. Revenue, profit, and sales for many of its lines of business. Shares of Apple traded lower in extended trading. Apple's overall sales for the holiday quarter were about 5% lower than last year's. That makes it the first year-over-year sales decline since 2019. Apple CEO Tim Cook blamed three factors: a strong dollar, production issues in China affecting the iPhone 14 Pro and iPhone 14 Pro Max, and every CEO's favorite whipping boy, the overall macroeconomic environment. Here's a summary of Apple's financial performance for the quarter. Earnings per share was $1.88 versus the $1.94 estimated. That was down 10.9% year-over-year. Total revenue was $117.15 billion versus the $121.10 billion estimated. That was down 5.49% year-over-year. iPhone revenue was $65.78 billion versus the $68.29 billion estimated. That was down 8.17% year-over-year. Mac revenue was $7.74 billion versus the $9.63 billion estimated. That was down 28.66% year-over-year. iPad revenue was $9.40 billion versus the $7.76 billion estimated. That was up 29.66% year-over-year. Other products revenue was $13.48 billion versus the $15.23 billion estimated. Services revenue was $20.77 billion versus the $20.67 billion estimated. That was up 6.4% year-over-year. Gross margin was 42.96% versus the 42.95% estimated. Not too bad. Apple did not provide guidance for the current quarter ending in March. That is now getting to be the norm for tech companies. Actually, Apple has not provided guidance since 2020. But Wall Street analysts expect Apple to come in at about $98 billion in sales for the March quarter. However, the company offered data points about the company's performance. Apple CFO Luca Maestri said March quarter revenue would have a similar year-over-year trend to the December quarter. Maestri said Mac and iPad sales are both expected to decline double digits year-over-year. iPhone sales will decline less in the March quarter versus the December quarter, Apple added. The quarter was a stunning miss by Apple. And its first earnings miss versus consensus expectations in almost 7 years. In fact, it was only Apple's second revenue miss since August 2017. With sales coming in more than 3% below consensus expectations. It also represents a regression from Apple's success over the past 2 years. Driven by a need for new computers to work and go to school from home. It was Apple's first year-over-year quarterly revenue decline since 2019. And the biggest annual quarterly revenue drop since September 2016. Cook told CNBC that the miss was partially because of a strong dollar. Cook added that the supply of iPhone 14 Pro and iPhone 14 Max was significantly reduced during the quarter, meaning there were fewer to sell to customers. Apple's primary iPhone assembly plant in China was affected by COVID lockdowns during the quarter. Apple had warned investors about that in November. Cook said that production is now back to levels Apple is comfortable with. Cook said the challenging macroeconomic environment hurt in all areas of the business: iPhone sales, Mac sales, and sales of wearables like the Apple Watch. iPhone and Mac sales were down year over year. Apple's other products category, which includes headphones like AirPods and wearables like Apple Watch, declined over 8%. Cook said Mac sales fell because it was difficult to compare the quarter to last year's quarter. Apple released new high-end MacBook Pro laptops in that quarter. There were no similar launches during this year's December quarter, Cook pointed out. The report offered investors a few bright spots. First, Apple disclosed that it has 2 billion active devices, including iPhones, Macs, Apple Watches. It's an increase from the 1.8 billion active devices it revealed last year in January. The number is important to investors because it summarizes the company's global reach. We attribute that to having a lot of switchers and a lot of first-time buyers in the case of the Apple Watch, Cook said. And so obviously you need to bring in people that are not currently active on a device in order to grow. Apple iPad sales grew nearly 30% year over year after it released a low-end, inexpensive model, as well as a new high-end model during the quarter. It's a redeeming area in Apple's hardware business. One other silver lining for investors: Apple reported 6% growth in its services business, beating analyst expectations. Apple management said cloud services, payments including Apple Pay and Apple Card, and music were strong components of services. Cook added that Apple employees are beta testing a buy now pay later feature that will be part of services. It will be launching soon, Cook said. Cook said that Apple is cutting costs and hiring more slowly. Apple has not announced layoffs unlike many rival tech companies. We're also recognizing the environment that we're in is tough. And so we're cutting costs. We're cutting hiring. We're being very prudent and deliberate on people that we hire, Cook said. Barclays cut its revenue estimate by 7% for the first quarter, caused by a number of factors: slowing services growth, continuing production problems, and weakening demand. Apple struggled with iPhone 14 Pro shipments during the holiday season for a few reasons. There are COVID restrictions on its primary factory in China. Investors are also wary of rising interest rates. And consumer confidence overall is declining. All of these factors could hurt demand for Apple's premium-priced products. Shares of Apple were pretty much flat following the release of Barclays' note. In October, the world's biggest iPhone factory was hit with a COVID outbreak. The factory is located in Zhengzhou, China. The factory is run by Taiwanese company Foxconn. Foxconn imposed COVID lockdown restrictions. The factory then experienced worker protests over a pay dispute in November. Many of the employees basically went on strike. Foxconn has tried to entice workers back with pay bonuses. As things stand right now, Foxconn's Zhengzhou factory is almost back to full production. China has reversed course on its zero-COVID policy. Now, China is trying to reopen the economy. The policy of the Chinese Communist Party involved strict lockdowns. It also ordered mass testing to try to control the virus. But backing off of the lockdown gave rise to COVID-19 outbreaks across large parts of China. Apple has been a Wall Street darling for as long as most people can remember. Bank of America, B of A, downgraded of Apple in October to neutral from buy. The resulting sell-off vaporized $120 billion off its market cap. Apple's stock continues to be stronger than its big tech peers. Shares in Apple fell by over 25% in 2022, which is actually much better than most big tech companies. The Nasdaq Composite was down 31% in 2022. But that does not mean that all Wall Street analysts are very optimistic. Apple reportedly cut iPhone 14 production by 6 million units. Inflation is raging in most countries of the world. Central banks in almost every country are aggressively raising interest rates. And, if you follow this channel, you probably already know that tech companies are sensing weak macroeconomic conditions. Inflation is raging in most parts of the world. Central banks are aggressively raising interest rates in order to tame inflation. Consumers' budgets are getting tighter because of having to spend more on gas and food. So, consumer discretionary spending is weakening. And the United States is now teetering on the brink of recession. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.